Hi everybody, it's Justice Lee. Welcome back to Finance with Lee. Today I'm going to be sharing with you guys why CCL is my favorite stock pick of May 2020. CCL is Carnival Cruise Lines. So let's just get right into what happened to the company. So Carnival Cruise Lines, obviously we know that there's been a recent issue and it's really restricted travel recently. And the company's currently spending around $500 million per month, and they have almost no revenue whatsoever. No one's going on a cruise. Their entire fleet of ships is basically in port, and they're spending 500 million just to keep them there, just to maintain their ships and keep their crew paid. So what they've done is to keep up with all these expenses, they've drawn down on their credit facility, which is basically just a big it's basically just a big line of credit. And then they sold some bonds at 11.5% interest rate, which is terrible. That's almost like credit card status. Usually, I think right before this, they were able to get like 3.5, 4, 5, 6%, that range. So this is definitely at least 5% higher than the maximum they were paying right before this happened. But they did raise $4 billion on that. Then they also offered a stock offering at $8 a share when things were at their worst, essentially, when they didn't know if they might go bankrupt or not. All that generated about $9 billion in cash. So you can see that they're spending $500 million per month in cash with no revenue, and they're spending $9 billion. So far it sounds pretty bad. You're probably wondering why I would ever even want this stock. So let's look what has happened to the stock as a result of this. So at the beginning of the year, CCL was trading around $55, and now it's trading in the $12 to $16 range. Right now, it's about $14 as of filming this video. So it's down about 75%. Remember that we still do need to take into consideration the share dilution. They sold some shares in a public offering, and that diluted their shares by about 10%. So if it were to go back up to where it was before, it wouldn't really be at the $55. It'd be closer to about $49 because unfortunately, their shares are now diluted. So what's the outlook for the stock? CCL is the world's largest cruise company. They have some main competitors. That would be Royal Caribbean Cruise Lines and Norwegian Cruise Lines. Carnival Cruise Lines is by far the largest. They have over a year's liquidity, even if they have no revenue. So if they start to pick up bookings and actually start to go on cruises soon, then that's going to change it. But as of right now, they're predicting no revenue, but they still can maintain liquidity for over a year without having any revenue whatsoever. So I think they're in a great position to ride this thing out. I also think that bankruptcy is very unlikely because what are their creditors going to do with a bunch of ships that they have no way of operating? You need a large infrastructure, you need a great management team, you need a lot of different resources to be able to pull this off. And taking their ships in a bankruptcy isn't really going to get you your money back. So you need, if you're the bank, you need Carnival Cruise Lines to be able to ride this out, and you need to be able to get them through this so that they can actually start making the money to pay you back. Because you're just going to take a giant L if you don't actually help them out right now. Another encouraging outlook has been that the CEO indicated recently that the company has seen substantial bookings for 2021. Now, I can only guess as to how many bookings have been done, but I think it was mentioned that it was greater than what was looked at in 2019. So if that's true, and I think that's an optimistic view, but I would just like to consider it, if that's true that they're more than 2019, then it's looking like maybe 2021 can be a great year that they can get back on track, start to pay off their high interest rate debt, and their stock will probably go way up as a result. So, what's my strategy with the stock? So, I'm willing to buy shares at $15 or less. And obviously, I don't have infinite resources, but I'm going to buy a fairly significant position. I already do have a fairly significant position, but I'm going to continue to increase my stake in Carnival Cruise Lines up to the level that I feel comfortable. Clearly, I'm not going to let this be more than probably like 20% of what I own total. Even that's a really large number, but at $15 or less, I like them. I like them a lot. And then obviously, I'm going to hold these things for the foreseeable future. I'm not the type of guy who really likes to buy stocks for a short-term strategy. I like to hold things long, and I do like Carnival Cruise Lines. I think they're a long-term investment, and I think they're going to actually turn out really well at the end of this. So if I'm looking at the 5-year time horizon, looking at what they've done with their share dilution, I can see this stock at $40 or even higher in the next 5 years. And if I did that, I would 4x my money or more in a 5-year period. So there's a lot of potential with this stock, and I like that. I like to see something that can get me a lot on my money. If I really thought they were going to go bankrupt, or if I thought there was even a really decent chance that they might go bankrupt, I might still buy some, but I wouldn't make it a substantial portion of what I'm owning right now. So I don't really think they're going to go bankrupt, and I see a lot of upside and not a whole lot of potential downside. Of course, they could go down. They were trading at $8 a share earlier this year, and it's possible that they return to that level, but I like them as a long-term strategy. If they go down to $8 a share, hopefully I can buy some at that price. But right now at $15 or less, I love them, and I'm going to do that. So another piece of my strategy that I'm going to try as well is if they're trading in the $15 to $8 range, excuse me, the $15 to $18 range, I can sell some puts, cash covered puts on them to reduce my cost basis, or I can just collect a premium if they keep going up. Right now, with implied volatility being really high, what that means is the chance of the stock going up by a lot or down by a lot is really high. We don't really know what's going to happen with it. And when implied volatility is really high, then usually the premium for options is really large. So if I can continue to collect large premiums and then sell puts at a low strike price that I'd be willing to pay for the stock, then I can continue to sell options on Carnival Cruise Lines because the premiums are just really nice. Even if I don't get assigned the shares, I can collect a fat premium and then I'll be happy either way. So either the stock drops below the strike and I buy it at a great price, or I just collect premium and I'm happy either way. So in conclusion here, I don't want to fool anybody. This stock does have a very real risk. It could go lower and it could go bankrupt. I'm not 100% sure that it won't. I don't think that it will, but you never know. That's why stock market is risky. That's why the stock is really low priced, because there are a lot of people who probably don't see a really bright future for the stock. But I see that tremendous upside potential. Like I said, I'm not going to put all my money into this stock, but I see so much of an opportunity that I'm going to go heavy, and we'll see what happens. Of course, if this stock goes way down in the future and the market goes way up, then you might see me and I won't maybe be as happy as some other people who just have a S&P 500 ETF, but I'm making the decision and I'll live with it. So some people ask me why I like CCL so much and why not some of the airlines or some of the other travel stocks that are beaten down a lot. Well, those travel stocks, especially the airlines, Congress has said that they would bail out those companies, but with those bailouts comes some significant restrictions behind what they can do, and they're going to be severely limited in what they can actually return to shareholders. So I like a company that isn't going to be under those same restrictions. I don't think that CCL is going to get off scot-free and just not have to do anything, because I think there was going to be an investigation into why everything was so bad on the cruise ships, and maybe there's going to be some restrictions as far as how close together people can be or how many people can be on the same cruise. I think that that's going to have a lot less impact than the airlines. I think the airlines, if they get a bailout or a loan from the government, there's going to be some really strict regulations that they have to follow, at least for the next 5 years. And not knowing the future and not knowing what kind of stipulations are going to be put in those kind of packages, I'm just more comfortable with something like a Carnival Cruise Lines where there's less of a chance for a lot of government intervention that's going to be really negative for shareholders. So let me know what you guys think. Let me know if you have another stock that you like. Let me know if you disagree with me about the airlines or if you don't think that Carnival is going to go up like I do. And remember, this is just my personal opinion. It's not intended to be investment advice for you. If you'd like investment advice, please seek out somebody who can act as your fiduciary and who's a certified financial advisor. But do ask me any questions in the comments. I'll answer them as your friend, as a guy on YouTube. Obviously, I'm not going to answer anything as a financial advisor, but I can give you my insight. And please share this with your friends, like, comment, and subscribe. And as always, have a great day.